Today we're going to be looking at standard mileage as compared to actual cost and what the differences are. So for standard mileage would be taking those miles for business use and multiplying them with standard rate. And then actual cost are taking the cost of operating your vehicle, things such as your fuel, depreciation expenses, wear and tear, so like repairs you would put on the vehicle, things like that go against actual cost. There are certain rules you have to follow, and you have to keep contemporaneous records on your actual cost and standard mileage for those to take the deduction for both. So regardless of taking mileage or actual cost, you still need to keep track of your business use miles, because those percentages of business use as compared to commuter or personal use will determine how much you get to take on actual cost and on your mileage rate. So keeping good records is across the board a good idea. With standard mileage, you would take those business use miles. So say you drove 110,000 miles for the whole year, and then you drove 100,000 for business use. You would multiply that 100,000 times the standard rate, which from 2019 is 58 cents, which would give you a deduction of $58,000 for standard. And with actual cost, you would use that same ratio for those miles, but then you would look at things like how much you spent on gas, any repairs you would have done. Also, depreciation is a factor in the actual cost. Insurance, and then your annual registration fees also would play into actual cost. Standard mileage, you would multiply your annual miles times the standard rate, which is 58 cents for 2019, but this adjusts annually for things like inflation, gas prices going up, wear and tear on your vehicle being an increased cost because of registration fees, and all the things that factor into actual costs. All of those numbers go up every year, and that factors into why the standard rate goes up, and it doesn't just stay the same. And then so for actual cost, all of those amounts are accounted for when you're taking the rates. And you might say, try to figure out which is better. Talk to your tax preparer, because they're the ones who will be able to tell you which one is better for your business, because it depends on what kind of business you're running and how many miles you're using and what your costs are to whether which one's better for your business. And in the future, your business, where it's going, also will play to a point of if you want to take actual cost or standard mileage, because especially in year one, if you take the actual cost, you can no longer take standard rate in the future. But all of these things are things you need to discuss with your tax preparer before making any of these decisions, so that the best ones are made for your business